Gaurang Shah from Georgia joins in on the show. Gaurang, hi, afternoon. Let's firstly start off with your expectation from ONGC this time.
Well, Aisha, there is definitely going to be an improved performance. And firstly, a disclosure from my side, we do have a positive coverage on ONGC. And my guess is that on the OVL front, you're going to see a lot of pleasant numbers coming out. And on the domestic front, of course, given the fact that the government has taken its initiative to reduce the subsidy, I think that burden partly should be off the shoulders of ONGC, at least for some time. So we are working with a target of somewhere close to about 365 to 380 on ONGC. This is a little bit medium to long term. And my only worry, Aisha, is on the rupee dollar front because, weakness in rupee definitely translates into, we shelling out a lot more dollars to buy a barrel of oil. So that correction in the crude prices does get negated with the weakness that we are seeing in the rupee against the dollar. And where we stand right now, I think last time around when we came to this 56 level against the dollar mark, we did see some interference from the RBI. But we are well above those levels of 56. I think we are somewhere close to about 56, 20, 25. And if this is the theme, then that pressure on both the upstream and downstream company could get extended a little bit till the time you see rupee strengthening. But yeah, on the numbers front, ONGC, we are positive. And in case if there is any, overhang on the stock, we will definitely look at a buying opportunity. And as a disclosure, we have advised our clients to buy into ONGC.
What about the IT stocks then, Gaurang, in light of the rupee movement? Do you think there's a case to look at them more favorably right now?
Yeah, definitely. I think rupee appreciating and depreciating does translate into positivities and negativities, Sandeep. As a disclosure again, we have a coverage positive on TCS amongst the front line. Mid-cap IT is where we see a lot of opportunities, Sandeep. So Tech Mahindra, Persistent System, Mindtree, CMC Limited, and of course Mahindra Satyam. We feel that even on the numbers front, HCL Technologies included, we feel that on the numbers front, most of these mid-cap IT companies have done well. And I think given the way rupee is behaving against the dollar, there definitely is a case that at least from a short to medium term point of view, one needs to keep IT as a sectorial investment on the radar.
Gaurang, what's the expectation from Tata Motors? And you think the earnings disappointment is already in the price?
No, Aisha, I think there's going to be still correction coming in post the earning. And my worry is not on the domestic front because there they have already done bad. So the expectation is very negative over there. Margins from JLR, from the global market is where I'm a little bit worried about. And, this is one of the stock from a short to medium term, close to about 300, 305. One needs to exit the stock. And the disappointment on the numbers front will definitely translate into a price correction from where Tata Motors is trading right now. So we have advised purely from a short to medium term to book out from Tata Motors. And if there is something that we like in the four-wheeler pack, I think M&M definitely stands very tall.
What about the pharma pack, Gaurang, especially as Sun Pharma? We've seen very strong momentum build up on that stock on the back of strong earnings. A host of brokerages have re-rated that counter as well. How much more of an upside do you see for this particular counter?
Sandeep, I think post the numbers and the bonus announcement and the outlook and the acquisition that they are planning to do in form of Tata, if I'm not mistaken, in Germany, already they have Taro in their bag. My belief is that the excitement is definitely there across the pharma counter post the numbers and the announcement that we had from Sun Pharma yesterday. But close to about 1070, 1080, Sandeep, we would be a little bit careful buying additional into it at current levels. Maybe at correction, we will definitely look at it. But we have advised our clients who have bought it at lower levels to stay put and not to be in a hurry to book out. And I think with the kind of product lineup and the outlook that the management has given, there is a case of re-rating this stock, of course, upwards. But before we re-rate that stock upwards, you will see a little bit of profit booking. There has been a stellar performance undeniably. I think Lupin and Glenmark are the two stock ideas that we definitely like. And we have a very strong sell call on Ranbaxy amongst the frontline pharma company. And on the flip side, Dr. Reddy is definitely coverage positive with a target of 2150 to 2200.
Besides pharma, Gaurang, what are your top house recommendations?
Well, we just heard about banking. I think some of the other technical analysts have gone short. But from a fundamental basis, Aisha, if 18th June or before that we see, rate cuts come in, both in terms of CRR and repo, then there is a case to build up over here, purely from a medium to long-term point of view. So as a brokerage house, coverage positive on ICICI Bank, Axis Bank, Kotak Bank, IndusInd Bank and Yes Bank. We also like some of the names in the interest-sensitive stroke NBFC side, something like an LIC Housing. Again, we have a coverage positive over there. And, if you have to stretch your luck a little bit far, and if you have a little bit of risk appetite, then I think in the PSU Bank, State Bank of India and PNB definitely should be included.
Gaurang, we'll leave it at that. Always good to have you with us on the show with that perspective. That's Street View coming in from GeoG and BNP Paribas.